Hello, ladies and gentlemen. Good morning to you, and welcome to another session. So, let's quickly confirm that we are good to go this morning. So, if you simply can see my screen and you can hear my voice, kindly type in hi in the comment section. Let me get a feedback so that I know that we're on the same page before we move on. Okay, so I can see here. All right, thank you. 587, thank you very much. 959, thank you. Bless, thank you. Mia 2020, thank you very much. Good morning. 860, good morning to you. Hey, Carrie, thank you very much. And good morning to you as well. So, I will be taking this as a positive feedback that we are good to go this morning. On this note, I welcome you to another promising session on the X-Trend Spread. Well, my name is Sharif Daramola, and as usual, I will be your host for the next 1 hour, where we shall be evaluating the financial market using technical parameters to identify trading opportunities lining up for us during the New York session today. Well, as usual here, it's our culture here to always review all the pairs we have been monitoring since the beginning of the week, and this is simply what we are going to be doing. After which, we are going to be sharing ideas on how to manage the existing trade that we are in right now, and at the same time, if there are any new advices, I will be sharing them through the course of the session. And for those who are joining us for the first time, you're welcome on board. Glad to have you around. And what we simply do here is to come on a daily basis to evaluate the financial market and at the same time project what our expectations is going to be like for the New York session. It might look a little bit complicated at the beginning, but I advise you to stay tuned in, and with time, you get to understand how this works, and you will be able to use the information gathered here to make an individual decision during the New York session. So, with that being said, here, I welcome you guys once again. And the first thing we are going to be looking at is the economic calendar, as we have a macroeconomic event to look forward to today, and that is the gross domestic product annualized for quarter four. And this is coming up in, I think, 2 hours, 30 minutes from now. And what we have here is we had the previous data at 2.9%, with a consensus coming in at 2.9 as well. So there is no difference there at all. So we are going to be looking forward to see what the data is going to be. Is it going to be beyond expectation, below our expectation, or is it going to be as expected? And obviously, what we are going to be doing here during the live session is to look at the pairs that we have been monitoring. Let's see how participants are actually anticipating this event. And talking about macroeconomic event, you remember yesterday we had the FOMC, and it actually came in. I would like to share with you some few tips, few data which I was able to spool out from the the FOMC yesterday, and this is what we have here. Um, Give me a moment. Okay, so we had the situation. We had this one. We had few participants favored raising rate by 50 basis points. That is one of the decision that was made yesterday. Then we also have elevated prospect of recession in 2023. So majority of the participants expected this to happen in 2023. So that is more or less a risk averse statement. All participants agreed more rate hikes needed to achieve Federal Open Market Committee's job inflation objectives. So that is one other thing there we have. Continued tight job market would contribute upward pressure to inflation. Restrictive monetary policy needed until Fed confident inflation falling to 2%. Added that process likely to take some time. Uncertainty associated with outlooks for economy, job market, and inflation was high. So this was acknowledged during the FOMC, and the minute yesterday revealed some of this activity. And more importantly, is we want to see how the market is going to be reacting to this news, and we're beginning to see some traction for the US dollar in that regard, as we saw our price action moved in that direction. So we are going to be looking at that in a couple of minutes. So the first commodity we are going to be looking at this morning is the US oil as usual. And from the look of things here, we have been profitable on the US oil so far in the last 24 hours. And remember, where were we during the live session yesterday? So during the live session yesterday, we were around here, where we saw our price action had done a final breakdown of that $76.35 level. And remember, at the beginning of this week, we initially identified a channel which was where price action was actually oscillating right within the $77.90 level and the $76.35 area. So the $77.90 level was our initial resistance point for the week, and we had a support level for the week at the $76.35 area. And what we normally look forward to whenever we do have this kind of flat channel is to remain patient and wait out for price action to break out of this channel, probably the breakout of the resistance point to give us a buy opportunity, or the breakdown of the support level of the channel to give us a selling opportunity. Though we had a couple of buy moments at the beginning of the week when price action broke out to retest the $77.90 level, and in both occasions we saw price action move about 80 to 90 pips in our favor before we saw this bearish momentum that took over this market. And one thing that we observed here is that as soon as price got into the $77.40 area, we saw selling pressure, negating all attempt by the buyers to break out of that structure. And this led to a final breakdown of this bullish trend line to incite and give us a beautiful signal that we might be heading in for a selling momentum. And this was exactly what happened. Price action did a final breakdown of that support level that we identified at the beginning of the week. We saw the retest of structure, and this incited this bearish momentum that we had prior to the live session yesterday. And during the live session yesterday, we identified a simple setup where we said we shall be using it to guide trading activity. And one of the setup we identified was this bearish trend line after connecting the series of lower heights. And since we had the breakdown of the $76.30 level, for those who had missed out on that opportunity, I laid emphasis here that we might likely see price action give us another chance to join that decline, and this might likely come in the form of either a retest of the structure, which is exactly what happened 2 hours into the New York session yesterday, and boom, price action dropped significantly well. And remember, we also identified structures like the $75.50 level and the $75 area where we anticipated adding another position to our existing trade if price action moved in that direction. And in fact, since yesterday, now we have a situation where price action had moved over 200 pips in our favor. So for those who had been part of this profitable trade, congratulations to you guys for being on standby to catch that move. And some of us will have taken some profit on this one and left this trade. But for those who are still in this trade, I will be advising you to get out of that trade at this point, as we have a situation here where price action appears to be trading right above the $74.30 level, which is sharing a beautiful confluence with that bearish trend line that we identified earlier to signal a possible bullish momentum going to be happening around this area. So at this point, I would advise you, if you are still in the sell position right now, kindly get out of this trade as we look forward to see what to look out for going into the New York session today. So before I go into the details of what our expectation is going to be like for today, the first thing I would want to do here is to scale up into the daily time frame so that we can have an holistic view of what is really going on in this market. And the reason why we would have to go into the daily time frame is simply because we need to look at this from a long-term perspective and identify if the sell position that we were yesterday is still going to be valid for today, or we might likely be seeing a bullish momentum from that point. So when we scale into the daily time frame here, well, like we always say, we have identified the fact that price action has been bearish in the last 7 to 8 months, and as a result of this one, we have this bearish trend line figured out after connecting the series of lower highs here. And as you can see, price had consistently respected that bearish trend line. However, when we zoom into structures probably between the month of September and this present moment, one thing you would observe is that price action had been caught within a consolidation phase. And as you can see, what we have here, we have something around the $82.50 level and the $73.50 area, which has emphasized the indecision in this current market, as price action is yet to break out of the structure. So we have been trading within a range right now in the last couple of months. So at this point in time, price action dropped yesterday, breaking down this demand zone that we identified earlier. As you can see, the $75.50 level was broken to the downside with an engulfing candle. And right now, going into today's session, we have the situation running at this point where price action appears to be approaching that $73.50 level, which has been a strong buy niche in the past. You can see what has been happening here since the month of December. We saw how this level had been negating every attempt by the sellers to break down the structure. The same thing also happened at the beginning of this month as well. And right now we have a situation where price is heading towards that $73.50 area. So this is another key level that we want to be taking into consideration while mapping out our plans for today. And another thing we also want to take note here is the breakdown of that $75.50 level, which I showed you earlier has been serving as a strong demand zone in this particular market. And you know, from a technical standpoint, whenever we have a breakdown of structure, we expect that price might likely come back to do a retest of that structure in anticipation of another wave of bearish momentum. So these are one of the scenarios which are going to be looking forward to. Another thing about this current structure is this bullish trend line that has been supporting bullish momentum for like 3 months now, which was broken a couple of days ago. And if we extend this bullish trend line into the future, we could still see a situation where price might likely come into retesting either the $75.50 level or the bullish trend line here, which shares a confluence with that $78 level to incite another bearish move. So these are the things we are going to be looking forward to for today. But most importantly, we want to see how price action is currently reacting to the $74 area, as whatever market structure we are able to identify here will be the basis for the idea we will be holding on as we head into the New York session. So one thing about this current structure is, considering the fact that price is above a strong demand zone, we might likely see a trend continuation pattern, probably like a double bottom structure on our lower time frame to incite this counter trend opportunity back into the structure. That is one scenario. Or we could see a situation where a trend continuation pattern is formed around this level that will lead to the breakdown of the $73.50 level for another wave of selling momentum. So these are the things we are going to be looking at on the lower time frame. So with the information we have gathered here on the daily time frame, we shall be scaling down to the lower time frame and focus our attention around the $74 level. Now, going back into the 1 hour time frame, this is what we have here, and we need to take into consideration that $74 level which we identified there. So we are zooming into the current structure, and what we have noticed here since yesterday's later part of the New York session yesterday, we have seen a situation where price has fell within a range which is between the $74.30 level and the $73.85 area, to emphasize the indecision in this market. And in fact, the structure here has a tendency of either going bullish or bearish, in the sense that it could transition into a reversal pattern, and at the same time it could transition into a trend continuation pattern. And now, if we take into consideration this impulsive move to the downside, and looking at the current structure, as price action has been finding buying pressure around that $74 level, which we identified on the daily time frame. Let's quickly draw that out so that we don't get things mixed up here. So we have the $74 level figured out, which is one key level that we want to be focusing our attention on today, and at the same time using these to guide our trading activity for today. So we have the $74 level, a strong psychological level there, and we can see what has been happening here in the last 4 hours. Price action has been finding buying pressure around that area, as price has been unable to break the previous low that we have here. And so what this simply means is that we could likely have a reversal pattern here in the form of a double bottom structure. And you know, from a technical standpoint, whenever we identify a reversal pattern like this, the next thing we want to be doing is to identify the neckline of that reversal pattern, which will be the platform upon which we want to be taking a buy position. And coincidentally, the neckline area falls exactly along the resistance level of that flat channel we identified earlier at the $74.30 area. So now, one thing that also makes this current structure a very interesting one is the fact that it shares a confluence with that bearish trend line that has been guiding selling momentum since the beginning of the week. Remember, we had this bearish trend line. Let me zoom out so that we can see what I'm talking about here. So you can see the bearish trend line since the beginning of this week, and currently price is trading around that area. And making it more interesting is the fact that it shares a confluence with the neckline of that reversal pattern. So for this reversal pattern to be mature, we want to see an outright breakout of this neckline area to give us a valid reversal pattern. And coincidentally, it shares a confluence with that bearish trend line, which will definitely be a beautiful signal that the trend line may no longer have the capacity to continue to hold selling pressure. And if it so happens that buy pressure resumes above the $74.30 level, we'll definitely want to be joining that bullish momentum to the upside at this point. And mind you, if this happens, please note that this is a counter trend opportunity, and we might likely see a situation where price will come back into the structure between the $76 area and the $75 area. And why is that so? If we look at what has been happening here since last week Friday, we can see that between this area and this area has been a strong demand zone in this market. And yesterday we saw the breakdown of that structure to emphasize that that level was no longer strong enough to hold that bullish momentum anymore. And there is a likelihood that price action will come back into that structure again. So we want to be placing our TP target for this buy opportunity above the $74.30 level, between this area around the 76.35 and the 75.50 area, after which, if price action hits that structure, we want to see how price action will be reacting to this level to decide if we are going to be adding more position to our buy trade, or probably get ready to join a decline from that level to the downside. So these are the things we are going to be looking forward to here. So right above the $74.30 level seems most appropriate to join a buy position at this point, as that will result into the confirmation of that reversal pattern we just identified around this area, and at the same time breaking out of that bearish trend line that we have here. So we are looking bullish at this point in time, and we have our triggered position on. But if you had not have the triggered position on, well, you might want to remain patient, scale down to lower time frame, look out for buying pressure around this area, which is still likely going to happen at this point before we join another wave to the upside. So let's be on standby to catch this move when it happens. Now, there is one thing I would like to state here, and which is the fact that we need to be very, very open for any possibilities that could happen in the market. The market is fluid, so do we have to always also be fluid too as well, so that we can be profitable. So once we have a structure running and things are actually going against us, it is our duty to be as fluid enough to be able to change perspective with the market as things run by. So in that regard, since we already have a structure here, there is a likelihood that price action might take us out of our current buy position in such a way that it leads into a false breakout here, where a breakdown of the $73.85 level will be a beautiful signal for selling opportunities in this market to the downside. And if that is going to be the case, we want to be having our sell stop order right below the structure. And if price action does a retest of structure, respecting that bearish trend line one more time, then we could be adding more position to our existing trade. And then remember that we also have a key level at the $73 level, where a breakdown of that structure will also welcome additional position to our existing trade. So these are the things we shall be looking forward to during the New York session today. So we have this channel as a guide for trading activity. So if price action remains above the $74.30 level, we want to feel comfortable in our buy position. And if price takes us out of the buy position, leading to the breakdown of the $73.85 level, we shall be getting ready to join that decline to the downside. So these are my views here on the US oil for today. I hope I made myself clear. And if you think you need me to make more clarification on one aspect in what I just discussed, feel free to drop your inquiries in the comment section below. So I will be taking the next 10 to 15 seconds to read through the chat and see if there are any questions before I move on to the next option. So I can see 2799. I can see Kran. Good morning to you. Glad to have you around. Hey, Steamroller, I see you. Okay, been a busy week with meetings, so I missed a lot. Okay, it's okay, Steamroller. I'm glad that part of you is with us in this house. So thank you, and hope you're having a wonderful day at work. My only greetings to you. Hello's 9099, 780, and 174. Good morning to you guys. All right. So in the absence of no questions, I will be assuming that we are good to go on this one. So we shall be moving on to the next option now. And the next option we shall be looking at this morning is the US Tech. And in fact, the US Tech has been quite choppy in this market, as we had a lot of volatility in the market prior and post the FOMC minutes yesterday, as you can see what happened here. And as a result of this huge volatility in this market, we were taken out of all the positions we had in that market. And as a result of this, I was able to expand that channel. Remember, the channel was initially within the 12,000. Let me see what that is again. Let me extend it out a little bit. Okay. So we had a channel between the $12,120 level, $110 level, and the $12,060 area initially at the beginning of the week. And due to the volatility, we saw a situation where the channel was extended a little further to the downside. So we have something right around the $12,030 level. So permit me to extend the channel a little bit further so that we can have a better perspective of what is really going on in this market. Now, with the resistance point we had at the 12,100 level at the beginning of the week, remember that we should be having a buy stop, although right above that level, so that we can take advantage of any buying opportunity around that area. And if you are taking advantage of this one that broke out of the structure during the later part of yesterday's trading session, well done to you for being on standby to have caught that move. And if you had caught that move and you're still running in that market, you will be in profit of about 53 pips in profit at this point. So my advice right now is to move your stop loss to your entry point now. Secure the current position as we continue to monitor the price action. Now, with the situation we have here, in anticipation of the New York session today, we really need to understand what is going on in this market. Now, with the simple channel we have here, you can see how the structure appeared to have transitioned into a reversal pattern, with the neckline sitting around the $12,110 level. And we do have a breakout of that neckline right now, and from a technical standpoint, we expect that price will come back at one point to retest the neckline area in anticipation of another wave of bullish momentum. So we are going to be looking at the possibility of this happening too as well. Then another thing I would like to state here is that remember that we have been selling the US tech since the beginning of this week. And when we connect the series of lower highs since the beginning of the week here, you can see that we have a bearish trend line figured out at this point. And this line has been guiding selling momentum since the beginning of this week. And what we saw here during the early hours of today was quite interesting, as we saw the breakout of that trend line. Could this be a sign that the trend line no longer have a capacity to continue to hold bearish momentum? Well, that is one question we are going to be asking today. And considering the fact that we have been witnessing buy pressure around this area, could this breakout of structure be a sign that the bullish momentum is gradually coming in this market? So before we go into the details here, I think it's most appropriate we scale up into the daily time frame. We want to see things from an holistic point of view, after which we'll be coming back into the lower time frame to make a decision for today. So now if we scale up into the daily time frame, this is what we saw at the beginning of the week. Well, first of all, we saw the situation here where it's obvious that price action has been bearish. And in fact, throughout the course of last year's trading session, we saw the situation here where price had continued to find lower highs at this point. And when we connected the lower heights, we had this beautiful bearish trend line to guide our trading activity. Now, things got a little bit interesting in the month of June, as you can see how the $11,000 area had been serving as a strong buying niche in this market. So every attempt by the sellers to break down the structure throughout the second half of last year was met with strong resistance from the buyers. And what this simply means in this market is that the participants in this market have seen the $11,000 level as a cheap price to buy the US tech. And this actually led to a situation at the beginning of the year where price action did a final breakout of that bearish trend line to emphasize that the trend line no longer have the capacity to hold selling momentum anymore. And with the bullish momentum breaking out of that trend line, we saw price action continue to find higher highs, leading to the retest of the $12,900 level. And what we saw here is that as soon as price got into that $12,900 level, we begin to see selling pressure resume around that area. And talking about the 12,900, you will see that if we zoom back into the past here, you will realize how important the 12,900 level has been in determining the movement of price action. Look at what happened here in the month of March. We saw how this level has been holding buy pressure initially at the beginning of the year. Then we saw another attempt by the buyers to push price to the upside from this level, but it wasn't strong enough as we saw the final breakdown retest of the structure in the month of May to emphasize that sellers have finally come into this market. Though we had a little breakout of that structure here in the month of June, but immediately month of August through September we saw the breakdown of that level, and since then price action has been trading below the 12,900 level to emphasize the strength of the sellers from that area. Now we have a situation right now where price has evolved into something that looks more like a reversal pattern, and if you remember at the beginning of the week we were able to spot this double top structure here where we identified the neckline at the $12,030 level, and as you can hold on a second, as you can see here, price was unable to break the previous high, so we had the lower high, and then we had the reversal pattern here. And whenever we have a reversal pattern, you know the next thing we want to be doing is to identify a neckline area, which we'll definitely be using as a yardstick for selling opportunity. And thank goodness we were lucky enough to be part of the sell opportunity as price action broke down the neckline area of that reversal pattern to confirm the reversal pattern to be valid at this point. And to further emphasize the possibility of a sell-off happening in this market is the fact that we saw the breakdown of this bullish trend line. Remember, since the beginning of the year, price action had consistently respected that bullish trend line, and we saw the first breakdown of that bullish trend line happen during the course of last week's trading session to signal the possibilities of a selling opportunity coming in this market. So thank goodness we were lucky enough to position ourselves in such a way that we caught the bearish momentum to the downside. So right now price action is right at a critical point here, and that is the $12,100 level. And if we look into the past here, you would see how this level also has been a major selling niche in this market. Let's go to as far back as the month of November of last year. You saw that when price action got into the 12,100, we saw selling pressure resume from that area to negate all buyers' attempts at that area. And not until the later part and the first day of this month, we saw the final breakout of the 12,100. So right now price is back at the 12,100 level, and one thing that we want to be thinking of is whenever we have a breakout of a structure, price is likely going to come back, do a retest of structure, buy pressure above this level to incite another wave of bullish momentum. So that is one scenario we are going to be looking at today when we scale down to the lower time frame. So in that regard, if we start seeing buy pressure around this area on our lower time frame, how market structures gives us a reversal pattern around that area, then we might be anticipating that bullish momentum. However, if we take into consideration the reversal pattern we identified here at the neckline area that was broken during the first day of this week, we might be thinking that this is more or less a good bearish move. And one thing about this structure is breaking down of the neckline area, there is also a tendency that price could come back, do a retest of that neckline area to incite another wave to the downside. So if this is going to be happening, we need to see what is really going to be happening around the 12,100, how participants in this market will be anticipating the GDP, which is coming up in, I think, an hour 30 minutes from now. Whatever happens here will now determine what we are going to be doing. So if it so happens that we identify a buy pressure around this area or reversal pattern there, then we might likely join. We'll definitely join anyways, and hoping that price will come into the 12,310 level. And it now depends on how price action reacts to the 12,310 level, which is the neckline of that double top structure that will determine what our next line of action will be. So if on around the 12,310 level we start seeing selling pressure on our lower time frame, then definitely we will be seeing this as a retest of the neckline in anticipation of another wave of bearish momentum. However, if price action breaks out of the 12,310 level with buy pressure above this level, then this will be welcoming additional position in anticipation of another wave of bullish momentum here. So these are the things we are going to be looking at. So you join me right now as we scale down to the 1 hour time frame to see what is really going on around the 12,100. Now, scaling down to the 1 hour time frame, we are going to be looking at what is happening around that area. And so we have the 12,100 here, which was broken to the upside during the later part of the New York session yesterday. So remember, we identified this reversal pattern earlier on the 1 hour time frame, and we had, hold on a second, let me zoom out. So we had a neckline area at the 12,100, which is the key structure we saw on the daily time frame. So now that we have a breakout of structure, and I told you that if you had joined the breakout of the structure, you should be moving your stop loss accordingly to lock in some profit at your entry point, at your entry area, while we monitor this price action. Now look at what we have here. I think if we go into the 4 hours time frame, we will be seeing things more clearly here. All right, so this is the 4 hours time frame, and look at what has been happening since the beginning of this month. We saw the consolidation phase where price continued to trade within the 12,750 and the $12,200 level, which was the strong demand zone. And with the breakdown of the structure on Tuesday of this week, we saw that price appears to have come back into the 12,200. Let me zoom this out a little bit so that you can see what I'm trying to explain here. So in fact, we need to have a better scope of what is going on here. So we have the breakdown of that support level here yesterday, and price, as soon as price got into this level, we have been witnessing selling pressure around that area. So this might likely be breakdown retest of structure to incite another wave of bearish momentum if price action drops back below the $12,110 level, with selling pressure below that level to the downside. So we should keep this in mind while we monitor price action here. However, if we start seeing buy pressure above this level, then we want to be getting ready to join a rally to the upside. And if a further break above of the 12,200 level happens, we want to be adding more position to our existing trade. So what this simply says here with the current market structure we have here is that if price action remains above the $12,110 level, we want to feel comfortable in our buy position, and a further breakout of the 12,200 level will welcome additional position at this point. Now that we are seeing selling pressure here, we want to see how this momentum is going to go and how it's going to react to the $12,100 level during the New York session today to determine what our next line of action will be. So let's wait out and see how price action reacts to this level. And remember, those who are already in this trade, you definitely want to have moved your stop loss to your entry point to secure your position against any sudden pullback here. So for selling, to sell the US tech today, I would have preferred price action to break down the 12,030 level, selling pressure below that level to sell, but we might likely see an opportunity to join that sell momentum early enough if price action breaks down to 12,110, but we are not joining right away, as we want to wait for further confirmation in the form of a retest of that level or selling pressure below that area on our lower time frame. Then we could actually join that decline to the downside. So this is what we shall be looking forward to on the US tech for today. I hope you munch my screen so that you can use it as a reference point when you're about to make your individual decision. And if you have any questions whatsoever, feel free to drop your inquiries in the comment section. So I will be moving on to the next pair, and trust me, I will be checking the comment section from time to time to see if there are any questions for me. Now, the next pair we are going to be looking at is the USDJPY, and remember that the USDJPY has been a pair we have been buying since the beginning of this week. Remember, we bought it above the 134.150 level when price action broke out, retest that level at the beginning of the week, and we were able to add more position at the breakout of structures like this. But not until yesterday, during the live session yesterday, we were around here and I told you to move your stop loss to somewhere around the 134.500 area, where I said we want to see how price action will be reacting to the structure. And what happened, we were taken out of all the positions here. And remember, I also made mention that we have an opportunity to buy the USDJPY if price action breaks out of the 134.700. So after being taken out of the buy position here at the 134.500 area, we saw another bullish momentum begin again around this area. And remember, we had the 134.700 level as a yardstick for buying opportunity, and at the same time we had the bearish trend line here as a yardstick for buying and selling opportunity. I told you that a breakdown retest of the 134 will welcome selling opportunity, and since we didn't have that, a breakout retest of the 134.700 triggered a buy position for us. And if you had been on standby to catch that move, well done to you, as you will currently be running with about 20 pips in profit at this point. So if how are you at this point, I will be moving my stop loss to somewhere right around the entry point or above that area to secure this current position. And now if we look at the current market structure here in anticipation of this New York session today, you would notice that price action has been choppy since the beginning of the week. As you can see, price has been trading right between this tight range between the 135.00 level and the 134.500 area. So the 134.500 area has been a buying niche, and the 135.00 level has been an area where sellers have gathered to sell the USDJPY. And remember, the 135.00 level is the highest point the USDJPY has ever got to this year. And as you can see, as soon as buyers get into this level, all attempts by the buyers were negated by selling pressure around this area. The same thing also happened here during the week, and since then we have been witnessing that selling pressure around that area. So in order to add more position to our existing trade at this current market structure, we need a further breakout retest of the 135.00 area to add another buy position here. So if you have a buy position running at right now, ensure you have moved your stop loss accordingly to secure this current position, as we anticipate a breakout of the 135.00 level to add more position to our existing trade. And more of this consolidation phase we have been witnessing here is as a result of market participants anticipating a catalyst to bring liquidity into this market. And you know that we are expecting the GDP coming up in 2 hours from now, so we shall be seeing how participants in this market will be reacting to the structure. So let's have our stop order sitting right above the 135.00 level to add more position to our existing trade. Now, in as much as we continue to look out for buying opportunity, we should also take into consideration the selling pressure we have been noticing here since last week's trading session. And remember, I told you that the 135 level is the highest point price has ever been since the beginning of the year, and buyers still need some time to acclimatize with that current structure. So there is still a tendency that sellers could still push price to the downside from that area as buyers gradually get used to this current zone at this point. And if a selling momentum is likely going to be happening here, we'll definitely want to be seeing price action break down the 134.700 level, taking us out of the current buy position, and look out for selling pressure below this area to join a sell momentum from that area. Now, one thing about this structure here I would like to show you on the 4 hours time frame is the fact that since the beginning of this month, it has been quite bullish on the USDJPY. So this is what I saw here at the beginning on the 4 hours time frame. As you can see here, since the breakout of that important key level we identified on the daily time frame at the beginning of the week, you can see how price has transitioned into an ascending channel on the 4 hours time frame. And one thing about this ascending channel is the fact that if you look at the last impulsive move that started at the 131.500 level, that was last week, you would agree that a retracement at this point is long overdue, as those who took profit, those who bought from above the 131 level, will at one point want to do some profit taking activity, which will definitely reflect on the chart as a retracement phase, probably into the support level of that descending channel here, which lucky enough shares a beautiful confluence with that 133 level that was broken during the last week trading session here. So we might likely see a situation where a retracement drops as far as this area before the anticipation of another wave of bullish momentum. So if we start seeing any sign of selling pressure around this area during the New York session today, we want to anticipate that opportunity with a long-term TP target around the 133 area, or probably the 133.5 area, which shares a confluence with the support level of this ascending channel. So how do we want to be taking advantage of that? Remember, I have identified a 134.700 level here, which shares a confluence with this trend line that we identified here. So if a breakdown of that trend line happens, then that will be a sign that the trend line no longer have capacity to continue to hold that bullish momentum. Then we might likely see a retracement, a sell-off in this market, a profit-taking activity, like I said, before another bullish momentum will happen. So if you are a counter trend trader, you might want to take advantage of that move to the downside in anticipation of another wave of bullish momentum to the upside. So scaling back down into the 1 hour time frame, let's quickly recap how we want to be selling here. So right back to the 1 hour time frame here, this is the 134.700 level which we have identified here. So for selling opportunities, we want to see price action break down the structure. Remember, we are not jumping right in immediately, as we need further confirmation. Remember, we are still above a strong demand zone here, so we need further confirmations to happen, which will definitely come in the form of a retest of the structure. Look out for selling pressure on your lower time frame, then we could join that decline to the downside. And if a further breakdown of the 134.500 level happens, selling pressure below the structure will be a beautiful opportunity to add more position to our existing trade. So this is what we shall be looking forward to sell the USDJPY for today. But if that does not happen and price action continues to the upside, we already have a position here to join that bullish momentum to the upside. So these are my views on the USDJPY for today. If you have any questions, feel free to drop your inquiries in the comment section. All right, so I will be moving on to the last pair for today, which is the GBPJPY, which was introduced to us by one of us in the house on Monday. And lucky enough for us on the GBPJPY, we were able to make some significant profit, and that happened on Tuesday morning when we joined the breakout of that. Remember, we identified this channel here where we saw the resistance point, and I told you that we are buying the breakout retest of that level, which is exactly what happened here as we joined that bullish momentum, added more position at the breakout of the 161.850 as price action triggered our buy stop order. And in fact, price action moved significantly well with over 200 pips on our first position and with over 170 pips on our second position. So we were able to scoop over 300 pips on that one, and we saw that price action was caught within a channel between the 163.500 level and the 163 area as soon as price tested the 163 level. And because of this kind of situation, you all know what we look out for whenever we have a simple flat channel like this. We wait out and remain patient for either a breakout of structure or a breakdown of structure to join a trading opportunity. And one thing I told you yesterday is that we might likely have a counter trend opportunity where a retracement phase of this impulsive move will bring a culmination into the potential buy zone that we have here. So I told you yesterday that we should be having our TP target for any sell momentum taken here at a maximum 162.00 area, and this was exactly what happened here as price action broke down the 163 level, did multiple rejection of that level to give us an opportunity to join that decline, and price action hits the TP target at the 162 level with about 92 pips in profit. And remember, we identified the structure yesterday after bringing out our Fibonacci retracement tool to identify the golden zone area, which is between the 50 and the 78.6% of that previous impulse leg. And this is what we were able to identify here. And right now, price action is currently trading within that zone that we identified yesterday. And funny enough, we are at a critical point in the market right now where we want to see how price action will be reacting to this level to decide what our next line of action would be. So what we'll simply look out for whenever we have this kind of situation, let me readjust this so we have, okay, so we have a buy zone around here. So what we are going to be looking out for around this area is a form of reversal pattern to join a bullish momentum to the upside. So we might likely see something like a double bottom structure to join that bullish momentum to the upside, or probably a head and shoulder pattern, something like this, to join that bullish momentum to the upside. And one thing that makes this structure very interesting is that when we scale up into the 4 hours time frame here, you will see that we had this bullish trend line figured out since last week, which price action has been respecting since last week's trading session. Hold on a second, let me readjust this a bit to suit in the current structure. Okay, here we go. So we can see here that price action has consistently found higher lows here, respecting that bullish trend line, and at this point in the last 6 hours now, we have a situation where price is currently trading around that bullish trend line. So this makes it more interesting as we currently at a juncture where the possibility of a trend continuation is likely going to happen. And to further emphasize the possibility of a buy momentum here, taking into consideration this bullish momentum that broke out of the structure on Tuesday, you know, from a technical standpoint, whenever we have a breakout of structure, there is a likelihood that price will come back, do a retest of that structure to incite another wave of bullish momentum. And so right now we are at a critical point right now to look out for buying opportunity. So in that regard, we shall be scaling down to the lower time frame to find that. Now there is a catch to this current structure. What happens if price action breaks down the 162.00 level? Now, if price action breaks down the 162.00 area, what this simply means is that we already have a breakdown of that bullish trend line, which will be happening for the first time in, I think, 7 days now. That was the first time price will have broken down that trend line, and that could be a signal that the trend line no longer has that strength to hold bullish momentum, and selling pressure below this level will definitely give us an opportunity to join a decline to the downside. So let's scale back down into the 1 hour time frame here, and I was able to identify a trend line also, which we can use to guide our trading activity for today. So if we look at what has been happening here since Tuesday, Wednesday of this week, you can see that I connected a series of lower highs here to give me this bearish trend line. So if it so happens that price action continues breaking above the 162.400 level, by pressure above the structure, we should be getting ready to join a rally to the upside, and that will have broken out of this bearish trend line, further confirming the strength of the buyers at this point. Now, in order to understand what is going on here so that we can catch this bullish move early enough if it so happens, we want to be scaling down to a much more lower time frame, like the 50 minutes time frame, where we want to be looking out for structures to guide trading activity for today. Now we are on the 15 minutes time frame right now, and following this impulsive move that broke down the 162.400 level, remember this level had been a buy niche initially. That was during the later part of yesterday's trading session. We saw buy pressure around that area, after which we saw the breakdown of the structure here during the early hours of today. And one thing we have noticed is that as soon as price hit our TP target for the sell position we took here, we saw bullish attempt from that area. So we have a situation where price has come back into the 162.4 zone area. We saw some attempts here, so we might likely see a reversal pattern around here. So if a reversal pattern forms around here, then definitely the 162.400 area will be serving as the neckline of that reversal pattern. So what we are going to be looking out for to buy the GBPJPY is to see a breakout of the 162.400 followed by a retest of structure here on our lower time frame, or you could go as far down as the 2 minute, 1 minute, or 3 minutes time frame to look out for buying opportunity above that structure. And if that happens, we want to be joining a rally from that level. So this is how we want to be buying the the GBPJPY for today. So that is that on the GBPJPY. I hope I made myself clear, and to make things a little bit easy for you during the New York session today, you would want to screenshot my screen so that you can use it as a reference point when you're about to make your individual decision. So on this note, I will be calling it a day here. And for the sake of those who are not part of the beginning of the live session, let's do a quick recap of what we talked about today so far and what our expectations are ahead of the New York session. So the first thing we talked about today is the US oil here, and we were able to remember we were been in a sell position here, and I told you to get out of your sell position if you are still in that trade. And remember, we told you that we have a reversal pattern evolving here, and if price action does break out of the trend line or the $74.30 level, we want to be joining a bullish momentum from that area, and this is exactly what has happened here. So if you had joined that move above the $74 level, $74.30 level, kudos to you, as you will currently be running in about 40 pips in profit. So let's see how this plays out if you are joined, and if you had missed out on this opportunity, let's remain patient. There is a likelihood that price will come back, do a retest of that level in anticipation of a trend continuation. So let's be prepared to catch that move if it happens. Then I also made mention of the possibility that if it so happens that price action takes us out of the current sell buy position, breaking down the $73.85 level, selling pressure below that structure will be welcoming additional position to our existing trade. So let's be on standby to catch that move if that is what the market is going to be presenting to us during the New York session today. Then another thing that we said here is that we have a bearish trend line here, which has been guidance selling momentum since the beginning of the week. So we already have a breakout of that trend line. So break above of the trend line is buying opportunity for us, and if price trades below the trend line, we look out for selling opportunities. Then we went on to talk about the US tech, and on the US tech, we already have a situation here, and I was able to expand this channel a little further after the volatility prior to the FOMC and post the FOMC yesterday, and we had the neckline of that reversal pattern at the 12,110. We had the breakout of the structure, breakout of the bearish trend line to give us a signal that there is a tendency that buyers might come in this market. And for those who are taking advantage of this buy position here, I told you to move your stop loss to your entry point, and let's wait out and see how price action will play out from this level. Now, one thing I said here is this area has a tendency of a trend continuation to the upside. So one thing is, if you had missed the buy opportunity here, there is a likelihood that price will come back, do a retest of the 12,110 area, buy pressure around this area, then it could incite another wave of bullish momentum. So one most important thing about this level is that we need to take into consideration the 12,100 level, which also shares a confluence with that bearish trend line. So what I'm simply saying is that if price action remains above the structure, we feel comfortable in our buy position, and a further breakout of the 12,200 level will welcome additional position to our existing buy trade. However, if it so happens that price action breaks down the 12,110 level, dropping below the bearish trend line that has been guiding bearish momentum since the beginning of the week, then definitely we want to be getting ready for a decline. But we are not jumping in right away, as we want to wait for a confirmation, which will come in the form of a retest of structure right below that level, or you scale down to your lower time frame like your 15 minutes, your 10 minutes, your 5 minutes time frame. Look out for selling pressure below that level, then you could actually join a decline to the downside. And if a further breakdown of the $12,030 level happens, we want to be welcoming additional position to that existing trade. So I wish you best of luck on the US tech as well. Then we went on to talk about the USDJPY. And in fact, on the USDJPY, price action has been quite choppy here, as we continue to see a consolidation between the 135.00 level and the 134.500 area. And what we simply said here is that since we already have a buy position at the breakout of both the trend line and the 134.700 level retest of structure, we are currently running with about 20 pips in profit at this point. And I made mention that we should move our stop loss to the entry point here to secure the current position. And the reason why we are going to be moving our stop loss is simply because of the selling pressure we have been witnessing around the 135.00 area. And I told you that the 135.00 level is the first time price action had ever been to this level this year, and it will take quite some time for buyers to acclimatize with the structure before it can garner much momentum to break out of that level. Hence, we have been seeing this consolidation phase around here as buyers continue to knock against the ceiling at the 135 level. And I know at one point in time the ceiling will cave in, a breakout is likely going to happen, and to push price to the upside. So we are anticipating to add more position to our existing trade at the breakout of the 135.00 area. However, I have stated here that we want to keep our mindset open, as we want to also take into consideration the sell pressure we have been witnessing here, and there is a likelihood that we might be taken out of the current buy position in such a way that price action will break down the 134.700 area. And why are we taking this into consideration? Well, we had a better perspective, we had a better view on the 4 hours time frame, and I showed you something here on the 4 hours time frame where we saw what has been happening on this chart since the beginning of this month. And if you look at the structure closely, you can see that price action appeared to have transitioned into an ascending channel, where we have the resistance point of the ascending channel here and the support level of the ascending channel here. And if we take into consideration this impulsive move that started at the second week of this month, you will agree with me that a retracement phase appears to be overdue in this market. And from a technical standpoint, whenever we cite a situation where a bullish momentum or an impulse leg like this happens, at one point in time, those who are taking advantage of this opportunity here will definitely want to be doing some profit-taking activity. And if a profit-taking activity is incited in this market, we shall be seeing it reflected on the chart as a retracement phase before the anticipation of another wave of bullish momentum. And if we are going to be getting ourselves ready or position ourselves in such a way that we can catch this move, then definitely we want to look out for structures to guide our trading activities in that regard, so that we are not going to be caught surprised. So what I'm saying here is that we look out for the breakdown of the 134.700 level, which also shares a confluence with this bullish trend line that has been supporting bullish momentum since the beginning of this week. So if we cite a breakdown of the 134.700, remember, we are not getting too excited. We want to remain patient here and wait out for further confirmations, which is likely going to come in the form of a retest of that structure. And if we scale down to our lower time frame, selling pressure around this area will welcome additional position, and a further breakdown of the 134.500 level will welcome additional position as well. So this is what we are looking forward to on the USDJPY. So I hope you screenshot my screen so that you can use it as a reference point. But I am of the opinion that a breakout of the 135.00 level is very, very likely at this point. So I have a buy stop order right above that level. But if it so happens that a breakdown happens, then we should be flexible enough to switch our perspective as the market flows in that direction. Then we went on to close the day with the GBPJPY, which was introduced to us by someone amongst us here, and luckily enough for us, we were able to make over 300 pips in profit on this one as we joined this bullish momentum here on Tuesday, added more position at the breakout of the structure. And now we had a situation here yesterday where we also took advantage of the breakdown retest of the channel at the 163.00 area, selling momentum here, and we were able to scoop about 95 pips in profit on that one. And remember, we identified this buy zone area around the 162.00 area, which also shares a beautiful confluence with that bullish trend line that has been supporting the bullish momentum for quite some time now. And one thing I'm thinking here is that we might likely be, there is a high chance that a bullish momentum will start from this area. And to further buttress that is taking into consideration the bullish momentum that ignited on Tuesday here as we saw the breakout of the 162.00 level. And from a technical standpoint, whenever we have a breakout of structure, there is a likelihood that price will at one point come back, do a retest of that structure in anticipation of another wave of bullish momentum. So as at this point now, price is back within the 162.00 level, which also shares a confluence with that bullish trend line. So in order to have a better perspective here, we were able to scale down to a much lower time frame, like the 15 minutes time frame, to look out for buying opportunity around this area. And when we scale down to the 15 minutes time frame, which I will be doing right now, so that we can have a better perspective into what we talked about, we saw the situation here. So following the breakdown of the 162.400, we can see how this level had been a major buying niche in the past. We saw the breakdown of that structure. We saw buy pressure resume around the 162 point area, and it appears price action is transitioning into a reversal pattern, probably in the form of a double bottom structure. So we have a neckline at the 162.400 level, which I said we want to be seeing a breakout retest of that structure to give us an opportunity to buy the GBPJPY and join that potential trend continuation to the upside. So this is looking more bullish for us on the GBPJPY. So my bias for this one is bullish. However, we should also take into consideration the possibility that sellers might likely come in and take over this market. So despite the fact that we are looking forward to buying opportunities here, which is right above the 162.400 level, if it so happens that price action drops below the 162.00 area, then this will be a beautiful sign that the bullish trend line is no longer strong enough to hold bullish momentum. And if this happens, we need further confirmation like selling pressure below the structure to join a decline to the downside. And if selling pressure resumes there, it will share a beautiful confluence with this bearish trend line that we have identified here. So this is what we are looking forward to on the GBPJPY, and I hope that you have screenshotted my screen so that you can use it as a reference point when you're about to make your individual decision during the New York session today. So it has been a wonderful moment being with you guys. I can see your comments, Steamroller. Thank you very much, and I hope you having a wonderful time at work. And on this note, I wish you best of luck. Ensure that you secure your positions right now. Please ensure you make use of your stop loss utility on your trading platform. ensure you use your stop loss to secure your current position, as remember we are heading towards a macroeconomic event which is coming up in how many hours from now? I think an hour from now we are going to be witnessing the publication of the GDP, and this might likely has a high chance of bringing volatility into the market. So ensure you secure your current position, and let's wait out for the simulations we have identified to play out before joining or adding more position to your existing trade. So on this note, I wish, and for those who are joining us for the first time, I welcome you once again. Please ensure to be with us, stay with us tomorrow too as well, and with time you get to understand how this works. I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review the financial market and at the same time get ready for the New York session tomorrow. Do have a wonderful evening. Bye-bye.